The US economy is growing, consumer spending remains strong, and on the surface, things appear relatively stable. But economists are increasingly warning that America's economic engine is being powered by a much smaller group of people than before, the wealthy. A new analysis suggests that the US economy is becoming unusually dependent on high-income Americans to keep spending, raising concerns about what happens if that group pulls back. The numbers tell the story. Consumer spending accounts for roughly 70% of the entire US economy. But today, a disproportionately large share of that spending is coming from affluent households. Recent estimates show the richest 10% of Americans now account for around half of all consumer spending, up from roughly 36% 3 decades ago. Some data also shows the top 20% of earners are responsible for nearly 60% of all consumer spending. Why are the wealthy spending so much more? Well, much of it comes down to assets. The richest Americans own about 90% of all US stocks, while the top 1% alone owns roughly half of the country's stock market wealth. As stock prices surged over the past year, many wealth households saw their net worth rise dramatically and continued spending on travel, luxury, goods, and services. Meanwhile, many middle and lower income households are facing a different reality. Inflation has eaten into household budgets. Savings built up during the pandemic have largely disappeared. The personal savings rate recently fell to just 2.6%, one of the lowest levels seen in decades. Credit card and auto loan delinquencies are also rising as more households struggle with debt payments. Economists describe this as the K-shaped economy. One group, wealthier Americans, continues moving upward, benefiting from rising asset prices and strong investment returns. The other group faces higher living costs, weaker financial cushions, and slower spending growth. In fact, spending by many middle and working-class households has been largely flat, while wealthier consumers have continued to increase their spending. The concern is that this creates a fragile economy. If stock markets fall sharply, home values decline, or wealthy consumers become less confident and start spending less, the impact could be felt across the broader economy because so much growth is now concentrated in a relatively small segment of the population.